Join TWR in 2023. TWR Tech Video.
I'm on it. Hey, you know I'm on that though, man. Y'all, come join it. In the traders war room, warring with the market every day. We on Zoom. Never gonna quit. Ain't no way we gonna lose.
TWR is your one-stop shop. Market Melt-Up. What is this and how to prepare? All right, so what is a melt-up? Well, a melt-up is a sustained and often unexpected improvement in the investment performance of an asset or asset classes, driven partly by a stampede of investors who don't want to miss out on the rise rather than the fundamental improvements in the economy. Have you heard of this term before? FOMO? Well, this is the fear of missing out. And this gets a lot of investors, newer investors primarily, but also the advanced ones as well, because what it is you don't want to miss the bus. And when the markets are roaring or they're dumping, you want to be on the train so you can make money and ride the wave. So continue on, gains that a melt-up creates are considered to be unreliable indications of the direction of the market and ultimately where it's headed. Melt-ups often precede meltdowns. And basically, what goes up must come down. And usually when it comes down twice as fast. So, understanding melt-ups and the economic indicators. Ignoring melt-ups and meltdowns and instead focusing on fundamental factors begins with an understanding of economic indicators. Economic indicators come in the forms of leading indicators and lagging indicators. These are all forms of economic indicators, which investors follow to forecast the direction of the stock market and overall health of the U.S. economy. There's no guarantees in the stock market. All we can do is we take the information that we have, we digest it, and we make the best probability cause for the case in which we believe will happen, whether we believe the market will continue up or continue down or stay stagnant. Continuing on, leading indicators are factors that will shift before the economy starts to follow a particular pattern. For example, the Consumer Confidence Index, or the CCI. I'm sure you guys have heard that term coming into the market while we've been paying attention to the trends here recently. This is a leading indicator that reflects consumer perceptions and attitudes. You might have heard the term market sentiment. That's basically what we're talking about with that particular data. Is the consumer spending freely? Do they feel they have less cash to work with? A rise or a fall on the index is a strong indication of the future level of consumer spending, which accounts for 70% of the economy. Additional leading indicators include the Durable Goods Report, or the DGR. This is developed from a monthly survey of heavy manufacturers, and Purchasing Managers Index, or the PMI, another survey-based indicator that economists watch to predict gross domestic product, or the GDP, growth. This one right here is huge because this is what puts us on the global market and how we compare to other countries out there as well, especially the superpowers. So let's now talk about melt-ups and fundamental investing. Many investors attempt to avoid melt-ups and their impact on investor emotions when placing bets by instead focusing on the fundamentals of company. Warren Buffett is a great example. He is a famous value investor who made his fortune by careful attention to companies, financial statements, and amid economic turmoil. Here's a picture of the man, aka the Oracle of Wall Street, who coined the phrase, "Be fearful when others are greedy, but greedy when others are fearful." He focused on corporate value and price. Was the company on solid financial footing? How experienced and reliable was the management team? And was it over or underpriced? These questions often help investors focus on the intrinsic value over the hype. My next video, I'll do a comparison between intrinsic and extrinsic values in stocks. But for right now, we're going to stay on track with our current subject. All right, so let's talk about some example of melt-ups. Financial analysts saw the run-up in the stock market in the early 2010 as a possible melt-up because unemployment's unemployment rates continue to be high, both residential and commercial real estate values continue to suffer, and retail investors continue to take money out of stocks. More examples of melt-ups occurred during the Great Depression, when the stock market rose and fell several times despite a generally weak economy. According to research by wealth managers, stocks fell more than 80% between 1929 and 1932, but they posted returns of more than 90% in July and August of 1932, and the trend continued over the next 6 months. And that is basically what Warren Buffett speaks to. Be greedy when others are fearful, and be fearful when others are greedy. Here's a practical example of stock market melt-up in the dot-com bubble that occurred between 1999 and 2000. During the period, stock prices were on the rise, and the momentum was driven by investor sentiment that was not based on fundamentals or technical analysis of the stock market. Essentially, investors bought stocks without realizing that the market growth was not based on any economic factors, and the value of stocks exceeded their intrinsic value. The greed ultimately led to the stock market bubble in the early 2000s and its subsequent crash. A bubble occurs when investors purchase stocks for the sole purpose of selling them to other investors, and when they stop buying, the bubble bursts and the asset prices return to normalcy. We are currently seeing this trend now. Here's a chart from 1900 to current, right? And you can see all the major incidents inside of the stock market as the S&P just kind of went through some of the historical events. You can notice right there, there's the Great Depression crash, the bubble, the dot-com, the financial crisis, and look at where we're at currently. Right there. Look at that V shape just coming out of the ashes and basically just going to the sky limit, right? Notice some of the other ones. Recovery from here, the dot-com and the financial crisis. I mean, we have just absolutely exploded, which gives idea that we're into what is now being coined as the everything bubble. Everybody wants everything, the Internet of Things, just a whole bunch of just crazy, not just tech, but cars, and not just cars, but airplanes, and not just airplanes, but machineries, and so on and so forth, the everything bubble. Some analysts are predicting that the crash from this extreme V-shape to the moon type of explosion will bring us all the way down back to this level where that red arrow is at, and that's below 3,000, and it's even right at the cusp of 2,500, which would be a significant dump in the current economy. So if we're looking at this, right, and the estimates stayed in line and we did hit that 2,500, we'd be looking at a 39% decline at the current level. Put in perspective, this is the financial crisis. This was COVID. Now, to put in perspective, crashing from the height at the 41.18 all the way back down here to the 25 would mean that we would have decreased from the height of where the market literally dumped in a period of a couple years, 89%. It took about 20 years to recover from the great stock market crash. Just look at the volume of these popular tickers over here. Tesla, Lucid, Intel, Amazon, Riven, Apple, NEO, all of the ones that we all trade in and out every single day. Good volume on stocks is considered 2 million per day. Some of these popular tickers are being traded more than 100 times over that normal good volume idea of what a stock trades on the average per day. Gives into the idea that most aren't buying to hold, but rather they're just essentially trading among others. They buy, then they trade, and they trade to buy, and mainly to make a profit, but not with the intentions of buying and holding for long-term gains. This is called short-sighted profit hunting and leads to a bubble that eventually bursts and everything comes crashing down. So I'm giving you guys this info not to make you afraid to trade for profit, but rather to be ready to pivot and shift your strategy so that you can follow the trend. All right, that's the main part of the video, guys. I hope you got some value and worth out of this. Up next, I have some upcoming TWR events that I think you will be excited to see and hopefully are able to make some money following our particular method that we utilize. We got some upcoming classes. We want you to build your battle plan with Traders War Room classes. Make that market bend the knee and join us on 5 February at 1 p.m. Central Standard Time while I introduce you to how to manage risk and control emotional trading. This is the #1 account killer of newer accounts, and I'm going to teach you all the tips and the tools that I've learned since 2005 on how to keep these emotions at bay and become consistently profitable. Registration is on the website, traderswarroom.com/upcoming classes, and I will see you guys there. $15 gets you a seat, and every purchase gets the recording. And then 2 weeks after that, join us while we take you with a guest instructor, Diesel Trades, and how to day trade reading candles, volume, and momentum. If you have not seen Diesel trade on the TWR platform, he is aggressive, he's hard-hitting, and he is extremely popular because why? Well, he makes people money, and he's going to show you his style on how to trade on 19 February at 1 p.m. Central Standard Time. This class is $25, but it's a 2-hour-long class, and of course, every purchase gets the recording. Sign up today at traderswarroom.com/upcoming classes, and I will see you on 19 February at 1 p.m. Central Standard Time. And finally, before I let you go for this weekend, we have open registration for our next Options Fundamentals course. TWR Trading University is extremely popular, and we have people hounding us all the time for slots into our fundamentals course. So we opened up another slot so that we can put more people in. It's your time right now to register as it's open. So go to the link, traderswarroom.com/optionsuniversity. Register today. We have payment plans available, and class starts in February. Guys, this is a 5-week in-depth instructor-led student-engaged course that is done live via Zoom with all the courses recorded, put into a virtual classroom just like if you were taking an online class at a university, and it is a cradle to the grave, everything you need to know on how to trade options. Believe me, as soon as you're done with this course, you will come out a completely different trader, ready to attack the market and become consistently profitable. If you are serious about trading, this class is for you. Go to traderswarroom.com, learn more, and sign up today. $100 to $1,000 per day is possible when you're a TWR market warrior. So quit wasting money. That's not making money. Join TWR. The links are in the description. That's it, team. Don't forget, make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.
I'm on it. Hey, you know I'm on that though, man. Y'all, come join it. In the Traders War Room, warring with the market every day we on Zoom. Never gonna quit, ain't no way we gonna lose.